Hello again, fellow BeachBum traders. Welcome to part one of our weekly trading game plan for the trading week of November 11th through November 7th through November 11th, where we're going to talk about elect to make more money trading in November. So we'll talk about how trading has historically been in the month of November. We'll also talk about the effect of elections in general and the effect of a midterm election on the stock markets and trading, and how you can elect to make more money trading in November. So stick around, and again, we'll do our normal market analysis. We'll look at how the markets have performed, and then we will do our analysis and come up with our strategies of how we want to elect to make more money trading in November, how we're going to position ourselves to make more money this trading week, the first week, a full week in November of November 7th through the 11th. So thank you to everyone that's joining us in the live stream, in the live chat today. Ali in the Bay, thank you for joining us. Arthur Duncan, the Ricky Khan, good morning. Thank you all for joining us, and we'll go ahead and get started. So here's our Google document for our notes for part one of our weekly trading game plan for this week. And you should find the link to this Google document in the description box below. It's publicly accessible. We keep our notes in a public Google Drive folder. So again, you can access previous notes from previous of our weekly trading game plans. Again, so you can access those, any references, tools, additional videos, etc. Referenced in these notes, you can refer to them back via this Google document. So again, we're going to talk about elect to make more money trading in November. So this week I did some research and produced a number of videos that are currently unlisted. But because as a bonus for attending this weekly trading game plan part one, you can access these videos via the links in this Google document. The first will talk about how to make money trading in November. So it talks about how historically November has been for a trading month, and what the seasonality trend is in general for November. And what you'll find out, I don't want to spoil it. You can go listen to that video at your leisure. But what you will find, the conclusion is November is the best month for trading. So that's a good sign. And again, gives us the opportunity to elect to make more money trading in November, because historically November is the best month for trading. Also, I've got two videos about trading during election years, talking about the election cycle, the presidential election cycle, etc. in general. So that the first one is all about the any election years, and then the final one is specifically about midterm elections. And again, I won't spoil the conclusions and all the analysis of those. You can listen to those at your leisure, but when we get to the strategy section, I'll refer back to these again. So again, as a bonus for attending our weekly trading game plan, you can access these, and we'll release them publicly as we are able. So good morning also, Walter Lyons. Thank you for joining us. Nagam, glad to see you both in the chat as well. So we'll start out, we'll see how the markets performed. It was kind of crazy yesterday. Well, we see that the Dow started out going up, and then it dipped back down, and then at 2 o'clock it bounced back up to end up 1%. Same way with the Nasdaq at 2 p.m. seemed to be when the algos triggered on to go back up. So all the markets went up, and even though they were in the red initially until 2 p.m., they bounced back up. But we see 67% advancing, 28% declining, but only a very small number of new highs, more new lows. We have the majority still below the 50-day moving average, and the vast majority, almost 75%, below the 200-day moving average. So we'll look in the indices specifically to see if we can get any sign whether we're out of the bear market or not. Are we still in the bear market? We can see in the heat map, and again, this was very different before 2 p.m. yesterday. They were running the techs up and down yesterday. We see Tesla's big red. Otherwise, the FANG stocks ended up all green. See some of the news again. We'll talk about the interest rate hike and the implications of that. I thought that was a little interesting that Venezuela's inflation is now only 6.2%. And we'll talk about the dollar. A lot of the improvement in the markets was because of the dollar eventually declined significantly at one point yesterday. So if we look at oil, and this is a little counterintuitive, I'll talk about some of the reasons in my opinion, why I think oil ran up. Again, it's a little counterintuitive, so we'll talk about that. Again, none of this is financial advice. It's for education and hopefully some entertainment purposes only. I see natural gas broke up above 6 again counterintuitive, and we'll talk about why that is. Gold made a run. A lot of these is due to the weakening of the dollar. And once the dollar started weakening, all the dollar-denominated commodities and the indices, etc., started to run. So we see this decline in the dollar about noon. So the euro headed back up towards parity. I see the US dollar to the Japanese yen dropped off and the pound bounced up. And you see around noon is where that turn came. You see treasuries all went up. Again, as we expected due to the interest rate hike. We've been talking about this for a long time. And we also see that the curve is significantly inverted. You've got the 5-year at 4.32, 10-year at 4.16, and the 30 at 4.25. And again, we expect those to continue to rise due to the Fed raising interest rates. So now let's look at the indices and see if we can figure out what the overall direction of the markets are. So here's the daily on the SPY. We see it's still pretty much declining, lower lows, lower highs. It broke down below its near-term moving average. It's testing the 50-day moving average. Still declining though. So if we zoom out a bit, again, it's hitting resistance on the 50-week moving average, dropping down, still well below the 200. Again, we're still seeing lower lows, lower highs. So I would have to conclude from that we're still in a bear market. We're testing the resistance, but we have yet to truly break out of that moving average. And really until we get above the 200-day moving average, it's hard to say that we're in a bull market again. So we'll look at the Qs, the NASDAQ. And very similar. It did make a little bit of a higher low there, but it's still making lower highs, lower lows. So again, we would have to conclude we're still in a bearish market till we get some evidence to the contrary. And again, we can see it's significantly below its moving averages, so it would need to test that and would probably encounter some resistance there. Let's look at the Dow. The Dow was outperforming quite a bit. And yeah, it seems in much better shape. It may have bottomed there. It needs to go up and test that high. It's testing the moving average there. So the Dow is performing much better than the other indices right now. IWM. Not performing too badly. Again, might have achieved a bottom here. It's hard to tell because it hasn't broken the previous high. It did break through its short-term moving average, headed up. That looks like it's acting as support now. So again, the Russell and the Dow look like they're in better shape than the SPY and the NASDAQ. Let's look at the VIX. Again, even though it seemed like a really volatile week with the interest rate decision, the unemployment, all the inflation numbers, in general, the VIX is still declining. It did perk up just very briefly around the interest rate decision, but then it continued to retrace, head back down. So even when the market was declining and it seemed like a volatile week, the VIX did not ever really perk up. So we'll look at some of the groups, the sectors, etc. where might we find some opportunities? So if we go to the groups tab, we look at the sectors, and we've been talking about this over and over for a long time too. Is we're seeing a lot of sector rotation. So they're pouring money into the underperforming sectors. So in one day you'll see yesterday's underperformer becomes today's outperformer, and then they'll take profit in that one. That one will drop to the bottom, and that day's previous bottom will drop or go back up to the top. And that's what we're seeing, and that's what we'll see in these charts. Now we're also seeing within a given sector, and we'll see this particularly like components of the energy sector, they're picking out, solar. So solar will underperform one day, and the next day solar will be the top performer. So again, there's opportunities in that using this site, the groups tab of FinBiz is very useful. Look at the sectors, look at the industries, look at the underperformers, start to see money flow into one of those underperformers. There's an opportunity to jump on that bandwagon and ride it up. When they start taking profit in that sector, you can take profit too and let it go down and pick the next underperformer. So again, plenty of ways to make money. It's just a matter of your style of trading, what types of trades you like to make, etc. But again, plenty of ways to make money in any market. And again, that's one of our reoccurring messages that we want to get through to everyone is there's plenty of ways to make money, even if we're in a bear market or whatever kind of market. So again, for the week, these have been outperformers in general. Basic materials, energy, utilities is pretty defensive. Again, technology, communication services were the worst performers for the week, but then we saw at certain times they tried to run technology. So when you see the money start to flow, if you want to play momentum, play day trades, there's plenty of opportunities there. So again, for the months, the strong sectors, energy, recurring theme, basic materials, utilities up and down, but the weakest continue to be technology, consumer cyclical, consumer discretionary, and communication services. So, and again, energy is the only real recurring theme. Financials, and they benefit from the interest rate hike. Basic materials, and a lot of the basic materials go up and down too with dollar strength. So again, recurring themes, but they will rotate in and out of these sectors on a daily, even intraday basis. So again, here's a great example. For several weeks, we saw aluminum was at the bottom of the list, and look at that on Friday. Now aluminum's at the top of the list. Copper's at the top. We saw great runs in silver and gold on Friday. And again, they had been beaten down. Steel had been beaten down. So again, coal had been beaten down. So a great example of the rotation within a sector. Also, again, these all benefited from a couple things, the weakening of the dollar and also the rumors of China reopening. And I'll show you that news article in a minute. But again, with China reopening, a lot of these commodities, particularly copper, gets a big pop, as well as oil. And that's one of my theories as to why oil popped, even though we'll see that the supply continues to increase. Also, we're going into recession, which tends to be a decrease in demand in oil. But it popped anyway. I think it's primarily on the China reopening and the weakness in the dollar. So let me get a drink a sec and we'll scroll through this list in more detail. Okay, so again, great place to watch the industry, select industry under the groups tab, watch, who's outperforming, who's underperforming. Typically what I do at the end of the day, and there we see solar. I think on Thursday, solar was at the top of the list, and today it's at the bottom of the list. So maybe they'll try to run solar again on Monday or early next week. So for the week, again, you see aluminum's popping up to the top, even for the week. So again, evidence that they're pouring money into the underperformers, taking profit in the outperformers, and again, that's how you can make money. We go to the bottom, again, software's kind of a different story. Here's some travel stuff. Travel goes up and down too. Internet retail, uranium. We're watching uranium, and tomorrow you'll see one of the trades that we took in one of our uranium stocks that we've been watching. Now, longer term, the theme's going to be energy, basic materials, financials, right? Some aerospace defense, but again, longer term trends, these are continuing to outperform, and the underperformers are going to be technology, software, things like that. Now, again, you see uranium starting to make a move up. Semiconductors had a good day on Friday. Silver and gold are starting to move up. So if we get continuing dollar weakness, they should start outperforming as well. So again, you can see these videos too if you want to dig in, find individual stocks in those sectors. I have several videos in the FinViz playlist as well that'll show you how to do that. Now let's talk about all the exciting economic news we got this week. Just checking the chat a bit. Yeah, and Walter Lyon says he likes the uranium play, knows some nuclear narratives. Yep. Okay, so Ollie in the Bay, one of our fellow BeachBum traders, posted in our Discord on Monday about Russia pulling out of a vital wheat deal in Ukraine, and we got a pop in wheat. Now, since that news came out, and thank you again, Ollie in the Bay, for posting that in our Discord. Just a reminder to everyone, our Discord's free to join. You can find an invite in the description box below. We encourage, welcome all of our fellow BeachBum traders to join in the discussions in our free Discord. Thank you again, Ollie in the Bay, for posting news. Also, Solidago posted news about OPEC expecting a surplus the first quarter 23. So again, we're talking about an oil glut, oil surplus. One would think the price would go down, but end of the week it went up. And again, I think it's on China reopening and dollar weakness. I did hear, and someone can maybe confirm this as well, is I thought I heard that Russia re-engaged in that wheat deal after this initial news. And I believe wheat declined. We'll see in the futures again. I think the grains declined after they came to an agreement. Tuesday, we got some PM or ISM data, PMI data. The PMI, so manufacturing inflation index, was a little hot again, but manufacturing employment was below expectations a bit. Manufacturing prices were down a bit. But then we also saw job openings. So here's one of the data points that indicates to the Fed that the job market is still very resilient, and in fact, rather than unemployment going down or job openings decreasing, it actually increased more than expected. So again, the job market is very resilient. The Fed didn't have to worry about that. So somebody is still opening positions. So I would argue, or my opinion, that service sector jobs that remained unfilled after the pandemic. Don't have detailed evidence of that, but that's my hypothesis. So mortgage rates over 7%, dropped a little bit, but still very high. ADP numbers were hot. So again, job market's doing fine. They don't have to worry about unemployment, so they can raise interest rates to kill inflation. And then we'll see their decision along those lines and discussion along those lines coming up. This was interesting. The crude oil inventories dropped by 3 million, which one would expect. Okay, so if inventories are down, price is going to go up. So then we got the Fed interest rate decision, and I've been saying it was my opinion for a long time they were going to go 75 basis points. They went 75 basis points. It was not a surprise to me. That's what I expected. Initially, the markets popped on that release of that decision, and then when the press conference came, and Powell took a hawkish stance, and uh, the in particular when the guy asked about the pop in the stock markets, and his answer to that, then the market took a dump. So again, it is our expectation that the Fed's going to continue to be aggressive, continue to be hawkish. All the data supports that. We don't see any reason for them to let up any further. Some of the quotes I picked out from listening to the press conference was ongoing increases will be appropriate. So interest rates are going to keep going up. We've been saying that for a long time. That's what you should expect. Trade accordingly. Significantly reducing their balance sheet. So quantitative tightening. They're selling off more bonds significantly. So they may increase the rate of that, which means bond prices, both of these things say bond prices are going to go down. Yields have to go up. The labor market remains extremely tight. So again, they don't have to worry about unemployment. They can focus on killing inflation, and that's going to be their focus. That's their primary focus. Labor market remains out of balance, so they want the job openings to go away. They want them to get fill up, and then for it to tighten up a bit. They're strongly committed to bringing down inflation. Again, that's their main focus, to get inflation down now. Another point I want to share that I picked up is he's still focused on that 2% inflation rate. There's no hint that they're going to move their target inflation rate up at this point. So that means significant rate hikes. My opinion, again, none of this is financial advice, but I think they're not going to be able to achieve a 2% inflation rate. I think it's too entrenched. I can talk about why I think that in more detail at some point, but I think at some point they're going to have to come off at 2%. But at this point, they're not, and if they're going to try to get there, they're going to have to really hike rates aggressively, in my opinion. And again, here's one of the statements that really dumped the market when he said it's very premature to be thinking about pausing. And this is where I thought the market was getting their expectations off sides when they saw, they've been talking about the Fed's going to pivot, the Fed's going to pause. They're not. They're not even thinking about it. So every time the market starts to move based on an assumption that the Fed's going to pause or pivot, that's probably going to be a false move and is going to be corrected. So please trade accordingly, trade safely. They're not even thinking about pausing, pivoting, nothing. So that will be sometime in the future when the data supports that, and we see nothing to indicate that the data supports that. So yeah, I see your comment, Arthur, and yeah, that's the point I'm trying to make. Is the data doesn't support that we're turning anytime soon. So yeah, you can make money riding the pops. Just we're in a bear market. We've been saying for a long time, you sell the rips in a bear market. So you can make great money when it runs, and they have been running tech on occasion, and you can make some good money. Just don't get caught. When it turns, it's going to turn. It's going to go south. So please be careful. Trade safely out there. That's our goal. Is we want everyone to succeed and make money, and not get hurt. That's why we are here. That's why we're doing this, and we hope that we're helping people make money, not get hurt. So then again, we saw there's some job cuts. Again, I think they're in different sectors. Tech is cutting. Keep hearing tech companies laying off, cutting, closing, stopping hiring. Apple, Twitter's cutting 50%. But again, another thing to think about with all these tech companies is they don't have a lot of people. it's a few number of people, and they're very productive. So if Facebook lays off, how many people do they have versus a manufacturer that issues a big job cut? Well, they have a lot of people. So again, we're hearing layoffs and cuts in tech, not surprising. And I think the service industry is still hiring. So we saw initial jobless claims, new jobless claims was lower than expected. So again, job market's still resilient, still strong. Don't have to worry about it. Productivity, this is bad. We can see productivity is low. So again, that's bad for GDP and earnings, etc. And that's a problem that people are talking about, but they haven't figured out how to resolve yet. We got services PMI. It says inflation's hot in the service sector. Again, not terribly surprising. Got ISM business activity was dropping, so this is signs of recession. Still get inflation. Natural gas storage data was much higher than expected. So again, we would have expected the natural gas price to go down because now they've got a lot more in storage, but it doesn't always react as you would expect. So eventually it went up. And again, I think that's just price action, trading, etc. Natural gas is very volatile, and it's neither oil or natural gas is following these storage data numbers really anymore. It's other factors, dollar strength, fears of recession, etc. So then we got the Bank of England comes out. They raised 75 basis points. So that's another point is the other central banks around the world, when we raise 75 points, they're going to have to follow. Not too far away, otherwise money's going to flow. And again, that's where we see the dollar strengthening. So if they don't follow, well, money's going to flow into the dollar. When they do follow, it will flow in somewhat in that direction. So the British pound recovered, I'm sure, somewhat based on that interest rate hike. So then Friday, we again got payroll data. Again, another issue is hourly earnings because that's wage inflation. It was higher than expected. Payroll's okay. Unemployment rate was just a little bit higher than expected. So again, all this data again says the employment, the job market is plenty resilient. The Fed can continue to be aggressive, kill inflation. That's going to be their focus. I don't expect that to change anytime soon significantly. So we got rig count again. I don't think anybody else is really paying much attention to this, but we're seeing a slow increase. We've seen this for quite a long time. Slow increase in rig count, slow increase in, even though the inventory was drawn down, the production capacity is increasing slightly. So we saw futures bounce higher, bond yields rise. This is all in the dollar issue. And then the jobs report comes in hot. So just watching you guys have your discussion. That's great. Love to see our fellow BeachBum traders discussing in the chat and helping each other out. If you're reading this or viewing this after the fact, join us in our live stream chats. Got some great BeachBum traders, and they're very helpful, and they'll help you out as well, both in our chats as well as in our Discord. So here's the other news that came out on Friday, and you saw a huge jump in yen, which is the long on the China tech stocks, the largest China stocks, about China reopening. Again, it's somewhat of a rumor, but there was an earlier rumor about China reopening, weak or lessening their pandemic lockdown guidelines and started to reopen. So we saw this huge pop. You guys probably also saw I posted in the Discord about the Chinese central bank supporting their stocks after the big drop. So again, I believe that's still going on, and there's going to be a support under there. So just, again, be careful shorting this. There's a level of support there. It did pop something like 20% at least at one point yesterday. So we'll look at the economic calendar and briefly at the earnings calendar in investing.com. Just a reminder, the next FOMC meeting is mid-December. Now, what exactly are we going to get for an interest rate hike in December? Hard to say. My personal opinion, again, opinion, I think we'll get another 75 because I think the inflation data is not going to cool off. And again, we've talked about this for several weeks. I think people are going to keep spending every dime and maxing out their credit cards until they run out of money. And again, next week we have there's a reading on consumer credit. Everyone expects that to be hot. And again, we'll see that. But going into the holidays, again, I think people just keep spending money. They're going to travel for the holidays. They're going to spend their money. And that means that I think inflation data is going to remain hot. And therefore, I think the Fed's going to continue to be very aggressive. Again, my opinion. But I think they'll go probably 75 in December. If they go 50, 75, again, the overarching theme is that interest rates are going to keep going up, right? So let me grab a drink and we'll look at the economic calendar for next week. Okay, so next week, Monday's pretty light. Got employment. Here's the consumer credit data. You can see here they've got their forecast is down a little bit. I think it's going to be hotter than forecast. Tuesday's pretty light. Now Mester is one of the FOMC presidents, and she's pretty hawkish. And so we've got two times this week she's going to be speaking. Some of the others are going to be speaking. I believe, and I know others believe, she's going to come out hawkish and say they just going to keep raising interest rates till they get inflation down. So expect volatility around some of these talks. You can see this is pretty early. There's another one, I think, on Thursday. We got mortgages. This is Wednesday, oil inventories again. Wednesday is almost always oil inventories. Thursday is natural gas inventories, usually at 10:30. Okay. Thursday, we got core CPI. So again, this is the primary measure. That PCE are the primary measures the Fed looks at for inflation. You can see they're expecting it to come down a little bit. If it doesn't, and again, if it's hotter than expected, there's a very good chance the markets are going to dump on that because it says inflation's not coming down. The Fed's going to have to keep being hawkish. And again, that probably will cause volatility and a potential dump in the market if that comes out higher than expected. So watch out around 9:30 on Wednesday or on Thursday. There's storage. Got Mester again talking. And then Friday, we got consumer sentiments. They're expecting it to go down a little bit. So we'll see. It had been improving a little bit, still very low. So again, a lot of things that can cause volatility. Although we're not seeing the VIX really pop up, we're not seeing panics. We're seeing volatility, but not a lot of panics. Again, there's opportunities to make money trading that. We'll probably talk about that in more detail tomorrow. So we're still in earnings, and earnings cause a lot of volatility in particular sectors. If somebody beats, they might get a pop. If they miss, they're going to get punished severely. And in general, it's expected to start to decline. So it's a good idea to keep an eye on this calendar. If there's anybody you own looking to buy or someone in the same sector, you can get sympathy plays. So it's good to keep an eye on the earnings calendar and listen to the outcomes of these earnings and how that might impact stocks you're looking at, stocks you own, etc. Something on your shopping list. Again, it should start to wind down a little bit. There's AMC. We'll get some, potential craziness around that. So again, plenty of earnings. We're still in the middle of heavy earnings season, so I'll let you look at that more detail in a minute. And Webull will look at where you can see the immediate upcoming earnings. Okay. Okay, so I covered all that. Okay, so let's look at the market screen in Webull. You guys are having good discussion, helping each other out. Love to see that. Thank you. Again, encourage your fellow traders to join us in our BeachBum trading community. Join us in live chats. Join us in our Discord. Hopefully you like this content. Please hit the like button, smash the like button. Help us get the YouTube algorithm to share this with more fellow traders out there. If you're not already subscribed, we hope you'll choose to do so and hit the bell notify icon so you'll get notified when we drop further videos, have other live streams. We release due diligence videos, educational videos throughout the week. We're trying to ramp up that release schedule a bit, so please subscribe, hit the bell icon and the like button. We want to build our BeachBum trading community for the mutual benefit of all of our fellow BeachBums, BeachBum traders, and BeachBums. Okay, so now I'm on the market screen of the online browser version of Webull. Just a very quick reminder, if you're not using Webull, you'll see we use Webull for our market analysis, for our due diligence, for most of our trading. We highly recommend it. You can still get 12 free stocks just by opening and funding a Webull account. So if you don't have a Webull account, plus you can trade starting at 4 a.m. and all the way to 8 p.m., which gives you a significant advantage. Which we can talk about in other times, but you get 2 free stocks just for opening an account, worth up to $300 and up to 10 more, each valued up to $3,000 when you fund it, even for $1. So, if you're not using Webull, why not open an account, put $1 in, get your 12 free stocks. You can always cash them out and go somewhere else if you wish to. I see a question by Nugem. Do we do options? Yes, we do options. Right now, we primarily sell covered calls against our existing positions, and then we will typically try to buy them back cheaper, and we'll collect the difference in premium as a self-generated dividend, and we'll talk about that in a little bit tomorrow as well. So yes, we do options. Again, we can talk about other types of option strategies and what we're looking at in more detail tomorrow as well. But yes, we also do options, and you can do options in Webull in a retirement account, which is wonderful. So we see the advancers decliners distribution in this histogram. So we see more advancers than decliners, but the level of advancement was small. We have a few at the very tails. See again, this time, we looked at this last week and the NASDAQ was outperforming this week. Now it's underperforming on Friday. Here in this calendar tab is where you can see the near-term earnings calendar. So here's what's coming up in the near term. You can scan for any of your stocks or related stocks that are coming up soon. It'll also flag whether it's an aftermarket close or a BMO before market open. So again, another useful feature there. Let's look at the best performing industries for the week, since we know Friday was kind of volatile, ended up. So education providers, that's a little odd, but probably related to the Chinese pop. Metals and mining, basic material, coal, energy, oil and gas, again, energy, transports. Construction was mixed. Surprising banking is not better. Finance should do okay. Everything else pretty mixed. There's investment banking kind of mixed. So overall pretty mixed except for energy and basic materials. Let's look at ETFs. We'll look at the markets. Market direction, so Dow up. S&P up. VIX. They've got a euro up in there. Otherwise, you don't see SPXY or UVXY in there. You've got a yen. Russell, let's see. Russell small cap bull, so up. Russell URTY up. So Russell up. FTSE China, so here's one of the China bulls up. Industrial, so this is again Dow related components. Industrials, utilities, we saw utilities perform well. Tomorrow, again, please come back for part 2 of our weekly trading game plan where we'll pick our individual stocks, individual ETFs to put on our watch list, our real-time watch list, our bullpen, our shopping list, etc. We'll look at individual ETFs and their risk-reward profiles that we might want to trade next week. We see energy did well, healthcare is kind of mixed, basic materials obviously positive, copper. Technology is positive here. Again, that was Friday. Consumer defenses, very positive. Real estate was positive on Friday. So again, sector that they're rotating in and out of. And welcome, John. Thank you for joining us in our live stream. So financial services, again, positive. Look at commodities. Natural gas obviously ran up. Natural gas, oil ran up. Copper ran up. Gold and silver. Natural gas, copper. Again, in just a second, we'll look at the futures. Bonds, high yield. Alternative income, Crane shares. So that's, again, a China-related. Asia, positive. Again, that's all the pop on China reopening. The yuan, yep. Yes, Arthur Duncan points out you can trade pre-market and Webull starting at 4 a.m., but options don't open in any markets until the market opens. Okay, so let's look at the futures tab in FinBiz. And again, I have other videos that go into detail about how to use the futures tab. Take a little peek at crypto. Crypto come down. It was all green yesterday, so it had a big pop on the risk on late yesterday. So we see this, late pop in all of the markets, but otherwise, kind of a peak rollover and trending down, although the Dow did make a higher high. So did the S&P, but then declined. And we see this little pop on Friday. The NASDAQ is, underperforming. It's very close to its 52-week low. And again, tomorrow we'll talk about some trading opportunities in this and how we're looking to play that testing of the 52-week low on the NASDAQ. Russell, again, made a higher high from a recent trend, but then rolled over. Europe popped on the weakening of the dollar. So did Germany. See the retracement decline in the VIX. So there's the big pop in oil. Again, all these I think popped on the dollar weakness we'll see in a minute. So if you look at this chart on the futures of nat gas, you see it's kind of been oscillating around 6 to 7, hasn't really hit 7. It's pretty much a consolidation. So although we're getting a lot of volatility, we're not getting a strong direction. Um, you can play this volatility with cold and boil. Cold is the short, boil is the long. You scalp this, and I know some of our fellow BeachBum traders just scalp natural gas and make good money doing that. So if you want to do something similar, although you see oil has more of a tendency to trend than natural gas. Natural gas tends to be just very volatile and then make runs in one direction or the other. But if you want to do the same thing with oil, it's gush and drip, or UCO and SCO are the ETFs to long and short oil. See the pop in gold, silver, nice huge pop on Friday. If you happen to catch that pop, you'll see tomorrow. We'll talk about AGQ, which is a leveraged ETF on silver, had a huge run on Friday. GDXU had a nice run on gold on Friday. See this huge pop in copper. Now, all these, because of the dramatic nature, the extreme nature of that pop, I personally, again, not financial advice, but I would expect somewhat of a retracement, somewhat of a correction, and then which direction? Is it going to continue to revert, or if the dollar continues to weaken, do we get a correction, a retracement, and then another pop? So that's what I'm going to be watching for. Is I expect a short-term correction just because this is an extreme move, and then after that correction, watch for which direction are we headed. And a lot of it's going to have to do with the dollar, China reopening, etc. So. And again, we'll talk tomorrow about like ETFs and individual stocks to play that with. So here's the wheat. It had that big pop on the Russia is pulling out of the Ukraine deal. And then I think they're re-engaging, and then it dropped back down. So the grains had that pop initially due to a supply issue. So here's the big drop in the dollar. So the dollar dropped suddenly on Friday. I'm not exactly sure what caused that offhand, but that caused a pop in the euro, pop in the pound, and we see all the commodities popped. The yen popped. Interest rates going up obviously is pushing bond yields down, or bond yields up, prices down. So after the Fed meeting, and that's kind of what we've said for a long time, as long as the Fed's raising interest rates, bond yields have to go up to compensate, and therefore bond prices are going to go down. So if you're talking about TLT, TMF, those are the bond price ETFs. There are several on bond yield that you can play. Again, until the Fed quits raising interest rates, we expect bond yields to go up, bond prices to go down. So, okay, so let's quickly talk about some strategies for this week. Let me grab a drink a sec, and again, we'll dig into some additional strategies, trends, etc., and wrap up. So if you have any quick questions, you can post them in the chat, and I will try to address them before we wrap up. Okay. So we talked about, elect to make more money trading in November. Again, I would recommend listening to these additional videos. It'll tell you why, November is considered the best month for trading. And again, it'll give you the details about why they consider that, references for that information. Um, but again, that's you want to look for a good opportunity. Again, you don't just want to jump in, throw your money in just because it's November. We want to be smart about it, but looking for opportunities. November is generally a good month. And we saw October, our theme there was don't fear October, and October actually turned out to be okay. It turned out pretty much as historically expected. Also, we've got the midterms on Tuesday, so you can listen to, what do the midterms and what do election years, how do they tend to play out? And I won't spoil all the details of that. These videos, the midterm election video in particular, will talk also about specific sectors and even some potential specific stocks that may outperform in a midterm year. So I, again, would encourage you to listen to those as well. But again, what we'll find, minor spoiler alert, is the elections really don't matter as much as the economy and the global events going on. So really, whoever wins, in general, the market doesn't really care. Um, so but the markets tend to outperform after midterm elections. So again, all reasons why we want to find opportunities to get in the market, find ways to make money going forward, elect to make more money trading in November. So starting in November is a good. The next 6 months to the next 12 months are good historical time periods for making money trading. So just encourage people that that got blown up and left the market. Is a really good time to look at getting back in. Find something, find your bull market. There's always a bull market somewhere. Find the bull market that you want to get into, and now is a really good time. So again, encourage your friends, fellow traders to come join us in our BeachBum trading community. Get back in the markets. You can make money. There's always a way, and hopefully we can help you find that way, given your trading style, and help you succeed and make money in any market. So. Now, a couple additional points I just wanted to make is if we get a split government, and I think which means the president is in one party and the Congress is controlled by at least part of the other party, which means essentially that you don't have a single unified government in one party. Some things I wanted to mention, potential implications of that, and that kind of is the expectations, is we kind of expect the Republicans to take at least one of the houses of Congress, if not both of Congress, but you're going to have a Democratic president at least for the next 2 years. So we're probably going to have a split government. And some of the things that may cause is stagnation. It's unlikely they're going to be able to actually do much. Because of the split government, they'd have to be unified to pass anything, and that's unlikely. They haven't. I don't like to talk politics in general, except where it directly impacts our success in trading. But that means the volatility due to politics may abate a bit because they're essentially not going to be able to really pass much if it's split. And the government or the markets tend to like that because, again, it removes some level of uncertainty so the markets can focus on economic conditions, global conditions, the economy, etc., and then trade based on that rather than worrying about politics. Another thing, again, my hypothesis is I think any of the spending bills that they passed that where the funds have not already been distributed, if we get a split government and the Republicans control any of the houses, I don't think those funds are going to get appropriated or distributed. It does cause inflation. The more money the government spends and dumps into the economy, the more money there is printed, the more inflation we get. And they need to bring inflation down. And you heard them ask Powell about that being a headwind for them to reach their inflation goal, is that the government keeps printing money. And that's true. Also, the Republicans say they want to make the debt ceiling an issue in 2024, and they're even talking about forcing a government shutdown due to the debt ceiling because it'd have to be raised in 24. So these things, in my humble opinion, again, say if a spending bill has not already been distributed, first it has to be appropriated. Just because you pass a bill, first they have to appropriate it in the budget, and then they actually have to send out the funds to somebody. And if they don't, then it really doesn't matter. Okay, they passed a bill to spend money, but it didn't actually ever go anywhere. So now, if they do rush to spend it, we want to know who got it because that may benefit them. So again, another point that don't bet on just because they passed this infrastructure bill or clean energy bill or whatever. If they haven't actually distributed the funds, don't bank on it until after we know what the government is comprised of in the elections, because that money may never actually go to those companies. So if you're betting that they're going to benefit from money that has yet to be spent, it may not happen, right? So also, we've made several videos. We've been talking about interest rates going up for a very long time. They're going to continue to go up into next year. We know if in December they get 50 basis points, 75 basis points, the bottom line is going to keep going up, and it's going to keep going up into next year. Okay. How fast exactly, we don't know, but it's going to keep going up until inflation comes down. So until we see inflation inflect downward for an extended period of time, the Fed's going to keep raising interest rates. And that's just how I believe it's going to be. So, and I don't expect them to let up anytime soon until well into next year. So, interest rates going to keep going up. Here's how to make money when interest rates rise, and we're going to keep seeing that. So let me see if there's any last minute questions. If I missed your question, please repost it. I apologize if I missed it, but otherwise we will wrap up. And again, tomorrow, please come back for part 2 of our weekly trading game plan for the first full trading week in November, November 7th through the 11th. We'll take all of this information, all this market analysis, all these strategies, and we will pick our individual stocks, individual ETFs to put on our watch list, look at trading for this week in November, November 7th through the 11th, and how we can elect to make more money trading in November. So again, I hope this all helps. If you have any other questions, comments, etc., please put them in the comments box below. Join us in our Discord. Again, our Discord is free to join. Anybody can join our Discord. The main channel is Speech Party, and you'll see that in our Discord. It's free to join. There's an invite in the description box below. There's an invite in the link section of our homepage. You can also ask us questions via our Facebook group, via any of our social media sites. You can find all that in the link section of our homepage, beachbumtrading.com, bum without the U. So again, you can ask us any questions via any of these channels. You'll also find links to trading platforms we use, tools we use, all the resources we've referred to in here, etc. So a lot of additional resources under the link section on our homepage. So we hope that all helps. And again, come back tomorrow. Please smash the like button on your way out. Again, we're trying to build our BeachBum trading community. Please share this with your fellow traders and friends and encourage them to come join us in the live stream and join in the great discussions as well as in our Discord. So see you all tomorrow and have a great rest of your day. Thank you.